Robinhood stock has been on the move again, and this week it has managed to extend its rally in both the Monday and Tuesday sessions. On Tuesday, the stock closed at $126.20, up $1.31 or just about 1% on the day. Along the way, it reached an intraday high of $127.28, showing that buying pressure remains alive and well. This comes after an already strong run fueled by the company's confirmation that it would be added to the S&P 500 index, along with momentum from new product launches, ongoing enthusiasm around Fintech, and a broader environment that has started to favor risk-on trades after the Federal Reserve delivered its first interest rate cut in this cycle. The big question now is, what exactly is pushing the stock higher, and what should investors be watching in the days and weeks ahead? The first thing to recognize is that Robinhood is no longer just trading on retail excitement alone. It is being buoyed by very real institutional flows tied to its S&P 500 inclusion. Every fund that tracks or benchmarks against the index is obligated to hold Robinhood shares once the inclusion takes effect, and those flows are spread out over a period of time as managers rebalance portfolios. This is not a one-day event. It's a structural shift that provides a steady demand floor, and that kind of mechanical buying pressure has been a big reason why the stock has continued climbing even after the initial announcement spike. That passive demand hasn't fully played out yet, which is why each session seems to have at least some support behind it. At the same time, Robinhood has managed to generate positive buzz with its recent product expansions. The Hood Summit earlier this year showcased several initiatives designed to broaden the company's reach, from social trading features to AI-powered indicators to futures contracts. Beyond that, Robinhood has also announced its new venture fund, which will give retail investors access to private company exposure that has historically been restricted to large institutions and accredited investors. Moves like this reinforce the idea that Robinhood is serious about evolving into a comprehensive financial platform, not just a commission-free brokerage app. For investors, that narrative of innovation and diversification makes it easier to buy into the long-term story. Another contributing factor this week is the broader performance of the financial and brokerage sector. Recent market reports have shown that brokers like Interactive Brokers, Charles Schwab, and Robinhood have all been outperforming the larger financial sector indices. Part of that is due to the macro backdrop. With rates starting to come down, the appetite for trading tends to increase, and fintech companies often benefit from renewed enthusiasm. At the same time, rate cuts ease pressure on valuations, making high-growth names more attractive relative to bonds and cash. Robinhood sits in the sweet spot of that dynamic, straddling both the growth and financial categories. It's also worth pointing out that Robinhood has been offering more incentives to attract capital. For example, through its Trade PM arm, the company recently unveiled a cash match program for registered investment advisors and their clients, offering 0.5% in bonus cash for eligible deposits. While on the surface this may not be a massive driver, it signals that Robinhood is looking for creative ways to expand its customer base and bring in more assets. These kinds of initiatives contribute to the perception that the company is proactive, competitive, and willing to push into traditional financial services. From a technical perspective, Robinhood is showing relative strength. After consolidating around the 115 to 120 range, the stock has now pushed convincingly higher, reaching into the 126 to 127 area. Each time it has tested support, buyers have stepped in. This pattern is important because it indicates accumulation rather than distribution. Strong volume on up days and lighter volume on down days suggest institutional participation, not just short-term speculation. Traders will be watching closely to see if the stock can build a new base above 125 and potentially set up for a breakout into the 130 level. So what exactly is behind the upward moves this week? In short, it's a combination of structural inflows, positive sentiment from product innovation, sector rotation into financial brokers, and technical momentum. There hasn't been one major headline driving the stock higher this week, but rather convergence of factors all pushing in the same direction. Sometimes that kind of alignment can be even more powerful than a single catalyst, because it reinforces the idea that multiple aspects of the story are improving at once. Still, investors need to consider the risks. Robinhood is not cheap by traditional valuation metrics. With a forward price-to-earnings multiple north of 40, the stock is priced for continued growth. That leaves little margin for error. If user growth slows, if crypto trading volumes stall, or if regulatory challenges emerge, the stock could face pressure. Crypto in particular remains a wild card. Bitcoin and Ethereum have been relatively stable lately, but volatility is never far away, and sharp moves in either direction tend to impact Robinhood's revenues. Regulation is another variable. With Robinhood expanding into tokenization and offering new products, scrutiny from regulators could intensify. Those risks aren't derailing the bullish momentum today, but they should remain part of the conversation. Another thing to watch is analyst sentiment. Many price targets for Robinhood still sit below its current trading range, in the $90 to $110 zone. That means the stock is already outperforming Wall Street's official forecasts. If analysts begin to revise their targets higher, that could create an additional tailwind, as institutions who rely on those targets gain more confidence. On the flip side, if analysts caution that Robinhood is running too far ahead of fundamentals, that could temper enthusiasm. Watching how research coverage evolves over the coming week will be an important piece of the puzzle. For a video angle, this story sets up perfectly as one about momentum and sustainability. A title like Hood at $127, Can the Momentum Hold?, captures the key dynamic at play. The narrative would walk viewers through the recent price action, explain the structural demand from S&P 500 inclusion, highlight the company's product expansion and sector tailwinds, and then lay out the risks and technical levels to watch. Framing it this way strikes the balance between acknowledging the impressive rally and keeping perspective about what could still derail it. As we look to the week ahead, the most important things for investors to watch are whether Robinhood can hold above $125, whether it can test and break through $130, and whether inflows from index funds remain steady. Keeping an eye on crypto markets will also be critical, as any breakout there could accelerate Robinhood's volumes, while a drop could sap some of the momentum. Watching analyst revisions, technical indicators, and broader market sentiment will round out the checklist. In the bigger picture, Robinhood has shifted from being seen as a speculative trading app stock to a company with real legitimacy, growing revenues, and a broadening product suite. Its inclusion in the S&P 500 is symbolic of that shift, and its performance this week reinforces the idea that institutions are taking it more seriously. For long-term investors, that's an encouraging sign. For traders, the immediate focus is on whether the rally has more legs or if it's due for a pause. So the cautiously bullish view heading into the next sessions is that Robinhood's momentum remains intact, driven by multiple overlapping factors. The upside potential is there if support holds and resistance breaks, but the risks, valuation, crypto reliance, and regulatory oversight are still very real. For now, the weight of evidence leans toward continued strength, and Robinhood remains one of the most compelling names to watch in the market today.